Start.
Hello, judges. My name is Eshan Dontamsetti.
And my name is Rishi Haldar.
Today, we're going to be presenting Coastal Financial Corporation Company, ticker mark CCB, sector finance, and we recommend you buy the stock. Let's start with a basic business description. So, it's a financial institution with a primary subsidiary of an in-person branch called Coastal Community Bank. It has 14 different branches in the Puget Sound region in Washington. Their HQ is also in Everett, Washington, established in 1997. They have a lot of in-person services, online banking services to both consumers and businesses, as well as an online platform. Next, we're going to be talking about industry overview.
So, CCB operates in both the community banking industries and the banking as a service industries. In the community banking industry, they offer basic banking services, and they specialize these services to their region, which is the Puget Sound region. This helps reduce credit defaults, and it helps build trust with their clients. They also operate in the banking as a service industry, and in this industry, they essentially lease out licenses of their software to other fintech firms to help them with their banking needs. Next, let's look at the competitive positioning of CCB.
All right, so we have a moat analysis. Our analysis is a narrow moat because the strengths are that CCP has a competitive in-person edge because of their community in Washington. They have a lot of connections and a strong community over there compared to any other bank, and they have basically regional dominance. But then it can also induce limitations because they have low exposure because their strengths lie in only that specific in-person location and nowhere else. But they also have their CCBX platform, which is a game changer. We have a Porter's 5 analysis. So starting off with the low, which is threat of new entrants, which is excessive capital spending from their end. They cannot support those finances, so it's a low 1 out of 5. Bargaining power of suppliers, low 2 out of 5. Bargaining power of buyers comes to a moderate 4 out of 5. Threat of substitutes, which is as the name suggests, just other companies taking over like AI startups, a high 5 out of 5. And lastly, competitive rivalry, also a high 5 out of 5. Next, let's look at investment summary, the thesis.
The valuation of the CCB stock is actually very stable and not volatile. And as you can see from the graph, it actually tends to grow in value. The market cap for this stock is at 1.35 billion and their price to earnings ratio is at $27 or 27.65. And their earnings per share is $3.25. The expert analysts assign a strong buy recommendation to this stock, and they predict that the stock will reach around $106 by the next year. Next, let's look at the uh, revenue drivers behind this investment summary.
Okay, so they have three main revenue streams of income. First one is the interest income, which is in their lending activities. So they lend, so all the deposits from the personnel or businesses, they lend a lot of loans and real estate properties as well. So they get a lot of interest on these, and that's one major source of income for any bank. Wealth and investment management, which is advisory fees for from their investment portfolio services. Um, to other to their clients, excuse me, to their consumers and clients. And lastly, banking as a service, which is their CCBX platform. That's one of their USPs or unique selling points in their company, and it basically just partnerships with other fintech companies that provide a platform. Next, we have our evaluation.
We set our target price for at $128 per share. This is based on the a $6.78 EPS estimate and an 18.9x forward PDE multiple. This is in line with other valuations from Live Oak, Bankshare, and SoFi, and this valuation is derived by their banking as a service partnerships, providing stable income, and their scalable business model, which will help them eventually expand in the future. Next, let's look at the financial analysis.
Okay, so we have the key financials on the left ranging from 2023 to 2028. Um, so let's analyze this profitability. They have strong profit margins with gross profit margin staying above 8% throughout 2025, which is predictive. And with their operating margins roughly 12% and an EBITDA margin at 15.15% by 2026, they have steady net margin growth as well, which improves to 9.04% by 2028. And while their return on equity declines from 16.56% in 2023, their return on asset remains stable between 1.7 and 1.9%. So overall, they have a lot of revenue expansion and growth. Their net sales growth is 50.41% 2023, and throughout till 2028, they have an 18% overall increase. So they have significant EPS growth. Next, let's look at their investment risks.
Okay. The main risks for CCB are concentration and margin compression. And both of these risks are derived from their heavy reliance on their clients to do well. They're really um, they're really heavy in on their banking as a service revenue model. And if one of their fintech partners like Robinhood goes under, they will feel very real uh, consequences from that. They also have faced a margin compression issue, which can be an issue if interest rates decrease and if they lose deposits. Next, let's look at the ESG considerations.
Okay, so an overview of this, by the looks of it, seems pretty harsh as they have a high risk rating of 38.7, which is one of the lowest positions in their industry. However, they have had significant improvement. So in 2023, they were in the 21st percentile in rankings among their competitors, but now in 2024, they've shot up to 45 percentile and are only climbing even higher. So in environmental initiatives, they have some energy saving occupancy sensors, and they also have an e-cycling system where it takes outdated tech and reuses furniture and recycles that. They have a social responsibility because of their in-person um, coastal community bank and the Puget Sound region. So they host a lot of employee promotions and organizations as well as consumer interactions. And lastly, corporate governance, which is huge, which is a major part of ESG in terms of financial institutions. So they're making sure to follow the protocols and not expose themselves to any more potential risks in the future. Next, let's look at AI's impact on our company.
CCB is actually an early adopter of AI technologies. However, since the time that AI has initially became mainstream and widely adopted, newer startups have emerged with even more reliance on AI. This is problematic for CCB because these newer startups can actually have more accurate models and are it's actually more efficient because AI has automated even more of their procedures and operations. However, this isn't all bad for CCB because they are, after all, one of the early adopters of AI, and uh, they are open to adopting even more AI technologies. The final verdict is that CCB's position is not completely doomed, and all they need to do is adopt even more AI technologies and go even more into that. Okay, that was our presentation. Thank you so much.
Thank you for listening.